Aloha! Today we're discussing the hot topic of VA loans for our military. If you're a veteran who's looking to buy or invest in Hawaii, I think you'll find today's conversation with our special guest to be especially helpful. My name's Chris Shomo, owner and founder of Home Sweet Home Hawaii, brokered by eXp Realty. This video is part one of a three-part series with our top local lender here in Hawaii, where we're going to discuss three of the hottest topics on loans for home buyers and bring you insight into the home buying process in Hawaii, including great financing strategies and what to look out for. My guest today is John Keifer with Kama'aina Mortgage Group, and John is a seasoned professional in the real estate financing field with over 15 years of experience, and he is well respected in the Hawaii markets as an industry leader. His specialty is residential property loans along with VA loans, and he works with buyers and investors on every type of loan. He has a deep understanding of the intricacies and complexities of the unique Hawaii market, and he makes lending concepts very easy to understand. One of the reasons, of course, all his clients love him. In this video of the three-part series, we will be talking about VA loans and giving valuable insights for our military on their VA entitlement benefits. John speaks from personal experience in this, and that he's also a military veteran. John, thank you so much for being with us today. So John, you're a pretty popular figure here in Hawaii real estate, and I always see you at the Honolulu Real Producers events and some other outfits like that. And those events, by the way, are held for top producers, for top real estate agents and producers in the field. And John, by the way, his industry nickname is Johnny Loans. Can you tell us how you got that nickname?
Yeah, sure. When I first got into industry, you know, when you're first in the business, and real estate as well, right, you really go after every opportunity that you have, right? So I was chasing these loans that were small loans, like difficult buildings that were really difficult. I became in my office the king of these really difficult loans that were really hard to get done. It wasn't the traditional standard easy black and white loan. It was the really hard ones, because that's what you get when you first start, right?
Yeah.
And I got to the point where I was closing so many of these difficult loans that when I'd walk into the office and my buddy Jim would say, "Johnny Loans," right? As kind of a joke. And it got to be a habit, and next thing you know, it stuck. So I'm like, okay, I'm just gonna roll with this.
Okay, cool,
Yeah.
cool. How long have you been in the industry?
I've been in the industry since 2015, I think. 2014 to 15, about 10 years.
And right now you work with Kama'aina Mortgage Group?
Yeah, Kama'aina Mortgage Group. That's right, I have my own team there.
Nice.
Yeah.
So John, like real estate agents like myself, we just don't sell homes, and great loan officers like yourself, you just don't look for like the best loan products and the cheapest rates. And what I see is we're really educators in this field, right?
Yeah, for sure.
And it astounds me that, like for example, if you take a nationwide poll of all the military vets, there are about 80% of vets that don't even know about the VA entitlement benefits.
That's right.
So that's crazy to me.
It is, and that pains me because I'm a veteran as well. And so when I work with a veteran who didn't know all the benefits of they get with the VA loan and other things too, these entitlements they didn't know they had, it pains me. I feel like I need to be the person to really educate them. Can I share a quick story?
Yeah, for sure.
So in my personal life, so I was in the military. I did some active duty time, mostly reserve time, kind of back and forth. And I didn't know that I was eligible for a VA loan. I didn't even know. I wasn't in the business, obviously. I didn't know. So when I bought my first home, I didn't know I was eligible for a VA loan. So I had like a 20% down payment, which, you know, was the standard back then. But had I known that I was eligible for a VA loan, I could have had a zero down payment loan.
It's amazing, and let's go into those specifics, because like I said, like there are a lot of military vets that aren't familiar with the eligibility. So why don't we highlight those and bullet point them for the audience?
Yeah, sure.
Okay. And on that note, like a lot of times that we come across military vets, they come with a decision like should they rent or buy when they're on island. You know, that's always the $1 million question. Yeah. And we're going to share with you why it's usually best to buy, to invest here while you're here.
So Chris, sometimes it's better for the veteran to rent.
Okay, tell me more about that.
Yeah, sure. So I recently had an Army officer who was moving to Hawaii. And I don't know if you know much about the Army, but their orders can change without notice. More than, they all can, but the Army seems to be one that does it quite often. So we had him pre-approved, he was out shopping for homes with his real estate agent, and then all of a sudden he found out that his orders were 2 years instead of 3 years.
There you go, yeah.
So we all decided, we all advised, and he agreed, like maybe we shouldn't buy because he's not going to recoup, his money if he goes 0 down. 2 years just isn't enough time. He's got to find a home, get into escrow, close escrow, and now he's got, a year and 9 months or so. And it just wouldn't be worth it for him. So
exactly.
In that case, renting is better.
And what's funny, I always share that with my clients too, or the military that referred to me. I make sure, are you going to be here for a minimum of 3 years? Right. Otherwise, it's not worth it. Unless you're going to hold the property and use it as a rental income and just keep it for a few years and let the appreciation buy back.
Right.
But it's like a minimum of 3 years, otherwise you're better off renting.
It's a great point, actually, because if his intention was to eventually turn that into a rental property, then just buy it. But he didn't want to do that. He just had a new baby and he wanted to have his home for his family at his next duty station. So
yeah. So unless you're going to be here for 3 years, then we recommend renting, unless you're going to hold on the property long term as a rental property and just allow the property to appreciate year after year. So to break it down for you, we'll give you a scenario, right? Whether if it's better to buy versus renting. So if you're like a non-commissioned officer, right? Your rent will typically be in the $1,500 to $2,000 a month price point. If you're looking for like a 1-bedroom, sometimes you can get a 2-bedroom in that price point, and depending where you're looking. But typically, if you're a family and you need a larger home, you're going to be paying about $44,000 or $4,500 a month in rent. So $4,500 a month in rent, that equates to $54,000 a year. Over 3 years, you do the math, 108, another 54. You're looking at $168,000 that you're paying mortgage into the landlord's pocket. Okay, so that's where we're going with this. When you can have your BEH work for you, but John will share more on that.
Yeah. So your BEH it's really important. So it goes up every year with inflation, right?
And for those that aren't military, BEH is your basic housing allowance, and you also have a COLA, cost of living allowance, when you're in the military.
And there's also a BAS allowance. It's not very much. It's a couple $100 a month, but it helps. It's for subsistence food and things like that.
Nice. Yeah.
All those things are non-taxable too.
Yeah. So we're the difference between, or the benefit of buying versus renting, and not losing money in rent every year.
Yeah, right. So one of the best things about the VA loan is that, and most people know this, is that it's a 0 down loan. It can be a 0 down. You don't have to have a down payment. That's wonderful. And you also don't have mortgage insurance, which a conventional loan would have. Interest rates are better for veterans, and I'll explain why in a second. And also the credit requirements are more lenient. So you can actually have a lower credit score than you could on a conventional loan and still get a VA loan.
How low can your credit be?
It can be in the 500s.
Wow.
Yeah, even the low 500s.
Yeah, it's really important to know for a lot of people.
Because on a conventional loan, I want to say it's about 620 or so. So it's much more lenient. There's a couple of reasons why VA loans offer lower interest rates than non-conventional loans. And they have better credit requirement, lower credit requirements.
Okay.
Is because there's something that most people don't know, and that's that military veterans, especially active duty military, have the lowest foreclosure rate amongst any group.
Wow.
Cohort.
Okay.
Age, gender, whatever.
Right.
Veterans are the lowest, and active duty even lower.
I didn't know that.
That's wonderful. So investors know that the veteran is going to pay, their mortgage, especially if they're active duty, because their command will make them pay.
Oh, right. Okay.
And another reason, which a lot of people don't know and should know, is that so the VA doesn't actually do the lending. They guarantee the loan.
Oh.
Yeah. So they guarantee 25% of the loan, which means that, let's say something did happen and the veteran couldn't pay and they have to foreclose. Well, the VA is guaranteeing 25% of that. They'll pay right away to the investor. So because of that, the investor feels protected already. So they can offer lower interest rates.
Okay, makes a lot of sense.
Yeah.
Cool. You touched on mortgage insurance, and like traditionally you said, to avoid paying mortgage insurance, the typical person would have to spend 20% down.
20% down, right.
But again, with VA financing, no money down.
No money down.
So they avoid paying PMA, property mortgage insurance, which can really add up. Like depending on the size of the loan, it could be $80 a month to $350 a month.
That's right.
So it's really significant for people.
Definitely.
Cool. So you talked about no money down and no mortgage insurance and more flexible credit requirements. Can you share a little bit about the closing costs? And
yeah, that's another great point. So the VA has a limit on how much on the closing costs. So the veteran, there's a cap to how much closing costs they can have. So it's actually less expensive, better interest rate, no mortgage insurance, 0 down. It's a win all around.
Another thing that came to mind recently too is that a non-veteran spouse can co-sign with the veteran. Is that true? Like increase their purchase power? If they can still take advantage of the VA entitlement?
Yes. So the veteran and their spouse can have the loan together even if the spouse is not in the military or not a veteran.
So that's outstanding because if you're like an entry level in the military, for example, like you were saying, and if your income's not all there to qualify for a much bigger home, your spouse has a position too, then you just combine forces.
Absolutely. I did a loan last year where the veteran, he was a veteran, but he didn't work. For whatever reason, he wasn't working. So he didn't have income, but his wife did. So we used his entitlement and the two of them bought a home together.
That's outstanding. And now I know like that's something that even a lot of real estate agents aren't familiar with. So that's really important to know. And when it comes to like what can happen if both spouses are military? What happens there?
Yeah, that's great. So I have clients that are dual military, they're both active duty, and we've closed 3 loans together with them. So they bought 3 homes with the 2 entitlements. Like what? And all on Oahu.
Wow.
Yeah. So they're both military officers. So in the first home, we used the husband's entitlement for that home, and so the wife's entitlement was free and clear. So they lived there for a couple of years actually. Then they moved to another home, and we used the wife's entitlement, rented out this home, used that rental income to offset that mortgage payment. So now they have this home. Then they want to buy another home, and so they used the leftover entitlement from each of theirs to buy a third home.
That's outstanding.
Yes.
And I have clients too that they're investors. I don't know if this is okay to say this. You let me know if we need to delete it.
Okay.
But I have clients too that are
Delete it. Sorry,
exactly. But I have clients too that are investors, right? And so they'll use their VA entitlement and buy their primary residence, stay in there for a year and a half, 2 years, and then refinance into a conventional loan, and they'll free up their entitlement, buy their next property, right, with no money down.
Absolutely fine.
Use their VA entitlement, stay in there about a year or 2, and then refi, buy another property. So that's how you build wealth, being a vet here in Hawaii especially.
There's some caveats to that, and I'll tell you about that. But initially, that's a great strategy. And so when I was first learning about the VA loans, and it's my passion, it's most of my business is VA loans. I actually spoke to someone at the VA and was like, why did they have to live there for a year? Right?
Yeah. And
they were like, well, the intention is to help the veteran and his family with housing. And on the side, in our conversation, he said, well, the military is not out to make real estate moguls out of our veterans. And I was like, oh. So they have to do it on their own by finessing legally. It's not a loophole, it's like legit, right? The way you described it. But there's a caveat to that. So there's what's called a one-time restoration that the VA will do one time in your lifetime. So if your veteran buys a home with their VA loan and they pay it off, they can get their entitlement restored one time. So here's what it is in a nutshell.
Okay.
Like if the cameras weren't rolling, say like, okay, so the VA has this thing that the home has to be disposed of in order to get that entitlement restored.
Okay.
So there's a portion of their overall entitlement they've used with each home. Sometimes they max it out, right? And then if they want it restored, they have to either sell that home or refinance into a conventional loan or a different type of loan. If they sell it, then automatically that entitlement gets restored.
Okay.
But if they don't sell it and they just refi into another type of loan, the VA is paid off. but they still own the home. They haven't disposed of it. So one time the VA will let them restore it and still keep the home.
Okay. And would that be like still to restore, would that be without the refinancing or they would have to refi in a conventional?
Yeah, so they would have to no longer have a VA loan on that home.
Yeah.
Either they paid it off or they refied into a different type of loan, but they still own it, then they have to request a one-time restoration.
Okay.
Right. And so your clients could totally do that. And then on the next home, they would use their remaining entitlement to buy another home.
Okay.
So there's 3 homes right there. And they could rent first one, second one, and then after a year they can rent the third one.
See.
And if they sell the second one, then they can buy a fourth one, all with VA.
Genius.
Remember I was saying that the VA guarantees 25% of the loan? So what happens is it uses up some of the entitlement. So if someone gets stationed somewhere else now, like this happens quite a bit. Someone owns a home in Texas, an Army soldier owns a home in Texas, and they're getting PCS to Oahu. They want to buy a home here. So they still own the home in Texas. And so what we'll do is we'll calculate how much entitlement they have remaining for Honolulu County, because it depends on the county, the loan limit. So a lot of times, if it's like San Antonio, Texas, those houses are 100, maybe 200K. They usually have enough entitlement where they could go to 700, 800, 900K zero down on their home here.
Okay.
And let's say they're buying a home for $1 million, but their VA entitlement is capped at $900,000 because they still have that home in Texas. So it's a $100,000 gap. They don't have to come up with $100,000. Because the VA is guaranteeing 25%, they only have to come up with 25% of the difference. So they're buying $1 million home,
That's right.
the VA loan with $25K down payment.
That's right.
Beautiful thing.
Yeah. So I don't know if you guys picked up on that, but if you're buying, like the average sales price of a home here is about $1 million. Let's just say it's $1,050,000 some change. If you don't have enough entitlement or you don't have enough down payment to come up with, so you only have to come up with 25% of the difference. Hey John, thank you so much, man, for sharing on the VA loan benefits too. And I know you're a veteran as well, and I know this is a big passion for you. And really, thanks for taking the time, sharing about it.
Well, thank you for having me. I appreciate it. It's my pleasure.
Yeah, for sure, man. And if you guys want to get in touch with John, we're going to definitely leave his contact information here below. But please reach out to John if you have any questions when it comes to anything VA related or any financing in general here in Hawaii. It really helps to have a local lender here as a resource when you're purchasing here in Hawaii. So John, before we cut out, do you have any other comments that you want to share or any other topics that are on your mind?
Yeah, sure. I appreciate that. So what I've come up against recently is that certain commands within the military, these active duty here in Hawaii, they tell their NCOs and their young officers not to buy a home.
Why would they do that?
It's a great question. I tried to talk to them, but they won't call me back. I said, let me come to your formation and talk to your crew about this because you're doing a disservice to these guys, right? As long as they're going to be here.
As long as they're going to be here for 3 years.
3, 4 years, right? And I think that it's just an old school mindset of, hey, you're in the military, we own you. You don't know where your next duty station is going to be. Why would you buy a home here when you could be in Leavenworth, Kansas, in 6 months if your orders change? Yeah. That kind of old school thinking, the military is not really that way anymore. Once you get your orders, that's pretty much where you're gonna go. So I think as the new generations come through and we educate them and they work with us and they get a new home and they use the VA loan and they love it and they go tell their co-workers, then I think that it'll start to change for the better. Yeah, thanks for sharing that. Yeah, of course. Thanks, it's really helpful. Thanks so much, John. We really appreciate having you here today, man. Thank you.
Cool.